officials. As part of our guiding principle, we consider shelter as a right of every Filipino family.
Presenting the Organization of Socialized and Economic Housing Developers of the Philippines' Shelter Agenda for a New Decade. The Philippine Private Sector Initiative, a new human settlements and urban development agenda. Institutionalize private sector participation in policymaking under the new Department of Human Settlements and Urban Development. Improving ease of doing business. Expanding housing finance and sustainable incentives programs for homebuyers. Upholding fair access to land through a genuine national land use policy. Redefining affordable housing. Promoting green building, resilient settlements, and post-pandemic approach in designing spaces. To learn more about the Organization of Socialized and Economic Housing Developers of the Philippines, please visit us at www.oshdp.com or email us at secretariat@oshdp.com.
The housing industry has evolved dramatically in the last few decades. And as we reach a very interesting time in our history, we are being called to evolve even more rapidly. And we here in the Subdivision and Housing Developers Association can help you evolve the way you should. We organize to improve our capabilities. We collaborate to synergize. We expand our network to increase our knowledge. With over 300 members nationwide and 8 regional chapters, we collaborate to improve regulatory and legislative advocacies for housing and urban development. Partnered with a DSHUD, we strive to elevate the industry to better heights, while giving back and paying forward to communities through CSR programs. With competent and dependable leadership, SHEDA capitalizes on the individual strengths of its members and magnifies their visibility through relevant presence in programs and activities pertaining to housing development. Creating a community of professional, capable, and excellent developers who exhibit dynamism, especially in the changing and evolving landscape of the housing industry. It's time to bring your journey as a developer far with SHEDA. For details on how to join, you may log in to sheda.ph. Find them on social media. Connect, network, grow with the Subdivision and Housing Developers Association.
Sign up for a year and pay less than 71 pesos per month. Visit tmt.ph/digital to get your free 30 days of the Manila Times Digital Edition.
We see an opportunity to do what's right, to change business as usual, to become business as it should be, where people don't just live and work, they thrive. To do that, Colliers is committing to elevate the way we do business, to elevate the built environment. We will minimize environmental impacts in our own operations and through the services we provide our clients. We will increase diversity and inclusion in Colliers and across our procurement practices to create an atmosphere welcoming of diverse ideas and perspectives. We will promote health and well-being in our operations and through our client services to help improve lives. Together, we will elevate the built environment and build better for our collective future. For ourselves, for our clients, for our communities, for the world.
Good morning, everyone. Hope all is healthy and safe. Welcome to Colliers' second quarter 2022 property market briefing. I'm Maricris Sarino-Joson, Colliers Director and Head of Office Services, Landlord Representation. I will be your host and moderator today. As always, we're very excited to share with your latest data and insights on the Philippine real estate market. A lot has happened since our last briefing in April, and we will look whether these recent events have had any impact on the property sector. Today's webinar will cover the performance of the office and residential in the second quarter and of the industrial and hotel sectors for the first half of the year. I'm sure we're all going to learn a lot today, which will hopefully help us make better and informed decisions this coming months and beyond 2022. But before anything else, we'd like to thank our event partners who made this webinar possible. The Department of Human Settlements and Urban Development, the British Chamber of Commerce of the Philippines, the Australian-New Zealand Chamber of Commerce of the Philippines, the Canadian Chamber of Commerce of the Philippines, the French Chamber of Commerce of the Philippines and Industry in the Philippines, Organization of Socialized and Economic Housing Developers of the Philippines, Subdivision and Housing Developers Association, the ABS-CBN News Channel, the Philippine Star, Business World, Malaya Business Insight, Business Mirror, Manila Times, and the Philippine Daily Inquirer through Inquirer Property. Again, I encourage everyone to stay for the open forum at the end of the presentations where our Colliers experts will answer your questions. Regarding our presentations, you may send your questions to the Q&A box. If you want to receive copies of our speakers' presentations, please do not leave a message in the chat box. Instead, send an email to philippines.marcom@colliers.com, and our team will reach out to you. We also encourage you to download copies of our Q2 2022 property reports via the links we will send through the chat box. So with that, let's begin our webinar. During our last briefing, we reported positive net take-up of office space for Q1 2022 after 7 consecutive quarters in the negative territory. We will see if this positive development continued in the second quarter, which will mean that the office sector is on its way to gradual recovery. For the residential sector, we will discuss whether rising inflation and interest rates have had any impact on consumer sentiment and developer strategy. Meanwhile, for the hotel sector, in our last briefing, we observed that occupancy slightly improved. Today, we will see whether its gradual recovery continues as revenge travel kicks in and foreign tourist arrivals improve. And in addition, the Philippine economy surprised us with a first quarter growth of 8.3%. And now that virtually all COVID-19 quarantine restrictions have been eased and no new ones will be imposed as promised by the new administration, is recovery finally being sustained? Is 2022 the year we will finally turn a new leaf? We hope to answer these and more in this webinar. Thank you, Joey. Joey was able to sum up Q2 2022 with a poetic twist of Paradise Lost and Paradise Regained. We're glad to have positive signals this Q2 2022. I'm now seeing a lot of questions in the Q&A. I'm sure speakers and panelists can't wait to answer these. So let me introduce them. First is our Colliers Managing Director, Richard Raymundo. Morning, Rich.
Morning.
Senior Director of Advisory Services, Theresa Teodoro. Hi, Tim.
Hi.
Director for Capital Markets and Investment Services, Paul Chua.
Hi, morning.
Morning, Paul C. Senior Director of Valuation Services, Paul Vincent Ramirez. Hi, Paul R.
Hi, Chris.
And Senior Director of Office Services, Tenant Representation, Dom Fredrick Andaya. Hi, Dom.
Morning.
And Kevin Hara, back again. I would also like to invite Joey. Joey, are you done drinking water?
Yeah, just had a gallon.
Okay, so let me... Okay, first, for Kevin, which class of office building has proven to be more resilient? Premium, Grade A, or Grade B and Y? This is from Serena Portolana of the ICCP Group.
We're seeing activity to return to the Grade A's building and premium grade buildings first. They're taking advantage of prevailing market conditions, rental reductions. So companies right now in that environment would have a flight to quality strategy. And what better way to execute that? It's best to execute that in a Grade A or premium building.
To agree with you, Kevin, I think this is really the right time to consolidate, relocate, and take advantage of this tenant-leaning market to really, go to premium Grade A buildings. Another question, Kevin, on the regulatory repercussions on BOI versus PEZA for clients who prioritize safety and the work-from-home hybrid models. This is from Hill, a good friend from KMC.
Hi, Hill. About the BOI versus PEZA thing, I'd like to clarify first that if you're an existing enterprise which is accredited by either of those investment agencies, you cannot do a lateral transfer of your incentives if you're not going to be able to transfer from PEZA to BOI and vice versa. So it's not how it would work because the incentives were already granted to you in your existing project. But if you're in existing enterprise and you do intend to go for a different if you're a PEZA enterprise and then you are considering committing to a work from home policy, the repercussion is that that existing project might have to be delisted from PESA. And then thereafter, the effect would be the suspension of your current incentives. But if it's a growth or expansion project, then you can go for a different IPA. So if, again, going back to work from home, if you're focused on doing a hybrid work for that expansion project, you could go for a different IPA, such as BOI. However, when we spoke to BOI, I have to note here that it is best, this is coming from them, it is best to wait for the IRR of the SIPP and whether that will contain any provisions on work from home. So as you know, BOI is also under the FIRB, the Fiscal Review Board, which also handles both PESA and BOI. So, it's something worth looking at and monitoring in the future.
Thanks, Kevin. So to sum up, really is we need to wait for the IPP of the Fiscal Incentive Review Board to really find out the direction of the work from home of PESA. So the difference really of the incentives is you get the same incentives, but with BOI, it's not locational based compared to PESA, which they need to avail of the incentive if they're within the PESA registered ecozone. So for the next question, this is from Ruth of Limanan, Ruth Garga of Limanan. This is for Paul C. Is there potential for other parts of Cebu or Vismin in general that will be activated as metro CBDs are saturated and dense already? Paul?
Okay, hi Ruth. Let me answer that question in two parts. So let's talk about Cebu first. If you look at Cebu, you have to look at where the infrastructure is going. So if you look at the Metro Cebu Expressway, which will connect Naga all the way to Danao, you would see that the developments is going towards the north and east part of Cebu. So the next area that will be more or less affected by these infrastructure developments would be Consolacion and Liloan. So those two areas might be a good location to start new developments, new mixed-use developments. The second part, outside of Cebu, Vismin. We're already seeing a lot of new areas in, for example, Iloilo, which is a very good business district already. So outside of that, perhaps Bacolod. In Mindanao, you have Davao, you have Cagayan de Oro. So the next potential destination would be Samalayang. So those are the areas that I'm looking at potentially could be the next destination for CBDs.
Thank you, Paul. Very exciting for Cebu with all the infrastructure projects and with the Cordova Bridge being finished, even having New Star in Cebu. A lot of opportunities in Cebu, and as Paul shared, Bacolod and other areas in Visayas and Mindanao. For the next question, for Tim, from Adrian Aguilera of Houseland, given the economic crunch happening globally, is residential demand expected to be bleak? And should developers be on the wait-and-see approach?
We showed the slide that residential demand was dampened and will be dampened. No? Our survey also showed that buyers are also still concerned about their financial stabilities and, of course, investors with their returns. No? However, opportunities still remain in certain locations, in certain markets, and you just have to be strategic on where you're going to position and how you're going to position your project. So an example was we showed the Balmori slide, which is located in Rockville Center, targeting the ultra luxury. There is strong sales for the horizontal market in the provinces near Metro Manila, which caters to the end users for the house and lots and the luxury market for the lots. So there are locations and segments where you can launch. Though, of course, you have to have a strong offering or selling proposition in those markets.
Thank you, Tim. I think same for if office is doing flight to premium grade A. I think for residential, people are taking advantage of all premium or better quality residential options for them. So next question is for Paul C. from Felix Lai. The law seeking to create a special economic zone adjacent to the new Manila International Airport was vetoed. How will this affect the development projects of the northern provinces outside of the Clark area?
I think it will not affect us much. The veto was done to correct some of the huge tax perks that is included in that bill. But the airport city is not included, so that will push through. But North, I mean, there's Clark, there's New Clark City, there's Tarlac, there's Luisita. I mean, there's a lot of developments in the north. Pampanga is probably one of the hottest areas in the north at the moment. So if you add that to the other developments that are already ongoing, I think we have enough developments in the north on top of the other planned developments that I'm sure will come up in the next couple of months further in the north. So I don't think that veto will affect a lot.
Thank you, Policy. And with the president coming from the north, I think growth will continue to also be in north of Luzon. The next question for Tim from Arlene Jacosalem of Community Creators. Would be interested to know news updates on how the residential sector is faring, lots, house and lots, condos, particularly in the QC Rizal and Bulacan areas.
We saw improved sales for Quezon City condos. It's been consistent for the first half of the year that the upscale and affordable segments were the strong sales drivers for that area. Also, new launches in that area helped with the sales take up. So it comprised actually 70% of the net sales take up we saw in Quezon City. Bulacan condominium sales was slower for second quarter, though it was driven by sales there was driven by the affordable segment. And then for Rizal, the sales were being driven by the mid-income segment, by development in the Cainta area. In terms of house and lots, it was higher for second quarter for both provinces, Bulacan and Rizal. And the same drivers that we saw in the condo market were there. So for Bulacan, it was affordable and mid-income for Rizal.
Thanks, Tim. Joey, on data centers, how many more data centers are coming this year in the Philippines? From Bernie Magkilat, Manila Bulletin.
Okay, Bernie, if you read our report, there will be 3 in the pipeline. So one is in Santa Rosa, Cainta, then another in Batangas. So 3 so far in Southern Luzon. But you also have to look at Clark and Cebu. I think there's a lot of interest also for these 2 locations. Earlier, I mentioned Singapore already lifted its moratorium on the construction of data centers. So that should pose a challenge for us, for the Philippines, in attracting more data center investments, especially Singapore needs it. Singapore needs more data centers because if you look at the data or financial center index, Singapore ranks 6th, Philippines 100th. So we're really left behind in terms of our attractiveness as a financial hub. And Singapore needs more data centers to support its viability and to retain its status as a financial hub. So this should really pose a challenge for the Philippine data center sector moving forward.
Thanks, Joey. For Tim, from Bing Gumbok of Ayala Land, inventory levels and levels of return cancellations in Luzon, what areas in Vismin are largely hit with cancellations and backouts?
In terms of Vismin, I guess Cebu, no? Cebu, sorry, in terms of remaining inventory in Vismin, Cebu has the highest, of course, out of all the provinces that we monitor there at around 10,000 units, majority of those in the affordable and mid-income segment. Those 2 segments were also, of course, because of the supply, the main drivers of the sales. In terms of cancellations in Cebu, we saw more cancellations in the mid-income segment than the other segments. Davao has the 2nd largest inventory, and then at around 4,000, and then the rest of the provinces that we monitor, Iloilo, Bacolod, is below 2,000.
Thank you, Tim. From Marie Manuel Semex, how are the rising costs and construction materials affecting development completion schedules? So we've been having discussions with the various landlords, and correct, the cost of construction materials is increasing, and this is affecting also pipeline and completion schedules. So we are also monitoring the percentage of the rising cost of construction materials. Joey, another question from Pythagoras Brion, FINMA. How are prices moving in the mid-market and high-end residential segments? Are we expecting pickup in foreigners renting residential units in NCR?
Well, anecdotally, we've been seeing that. I mean, we have a residential unit here at Colliers, and they've been very busy helping foreign clients, especially those that are coming back to the Philippines. I also showed that slide earlier where we see or saw substantial movement in the luxury markets, only from 3% share the total take-up. That is up to about what? More than 30%. So that indicates movement also for the luxury market. But I think given that interest rates are rising and mortgage rates are likely to be tweaked moving forward, the mid-market is one residential sector that we really need to closely look at, because this is the most affected sector once the central bank starts to raise interest rates and the developers start to tweak their promos and payment terms.
Yeah, Joey, speaking of interest rates, from Michael Ricofor, of RCBC, how would higher local interest rates affect demand for property?
Yes, I know, Mike. Hi, Mike. Definitely, we have been seeing interest rate hikes all over Metro Manila, affecting the appetite for the residential sector. Of course, when you talk about interest rate hikes, that does not just affect the developers, but also a lot of businesses across the stream. So you have companies that are likely to hold off expansion because of rising interest rates, and that is likely to temper their expansion plans, and that will also affect their absorption of office spaces. Even for manufacturing activities, high interest rates will also temper their expansion plans moving forward. So that again will affect their take-up of industrial spaces, warehouses, and even for retail, not just interest rates, but even inflation, as I discussed earlier, will also slow the recovery of retail, especially now that we're starting to see retail shopping and dining across the market. But we also need to look at the acquisition or purchase of developable land across Metro Manila. We've not been seeing substantial market activities at this point, and again, we're likely to see a flattish growth in land values moving forward. Paul Ramirez is here, and he might want to add a few points on how interest rate is affecting the appetite for land values across the capital.
Paul R.
Okay. Hello. So yeah, for interest rate, of course, interest rate will definitely affect values across Metro Manila. So whether the price remain the same, that's not really the question, but how much will be the cost of investment for most of these projects. So discount rate will increase, and of course, expected yields will increase because of the increase in interest rate, and values will be depressed. At the end of the day, it will be the KPIs of these property sectors, how the rents are doing, how vacancies are moving, whether all of these improvement in these KPIs can temper the rising interest rate. And if that happens, land values are still expected to be stable.
Thank you, Paul R. For Dom, what does Colliers' view on POGO comeback? Are they going to be back at the Philippines or not? From Yuki of Mitsubishi Estate Asia.
Hello. Yes, Kevin showed it earlier. We've seen two huge transactions coming from the POGOs, one in the Bay Area and one in Circuit Makati. And yeah, I think they're back. One thing to note, though, is that these are not purely Chinese POGOs. There are other POGOs coming in. And what I understand, especially with one of our clients relocating, is that this POGO has been there prior to the Chinese POGOs in 2016, and they cater to the Asian market. So meaning they hire employees coming from Indonesia, Vietnam, Thailand, and the other different countries in Asia. So yes, they are back. The only question, and Kevin showed this in the slide earlier, that if they do come back, it will help the property market, not just the office in general. So we're really hoping they will come back. The only question in our mind right now is that how aggressive will the comeback be, especially from the Chinese POGOs.
Thanks, Dom. Kevin, another POGO question from Rastin Mercado. Can you provide further details on the lease rates of new POGO take-up in the first half of 2022 versus pre-pandemic levels? Are they higher or lower? Approximately range? What's your longer term outlook on the take-up? Will it be dominated more by BPOs, KPOs over the next 3 years versus POGOs returning?
Well, if you look at the overall conditions in locations where POGOs used to patronize, like Bay Area and Makati, we've seen rental reductions ever since the pandemic began. In fact, in Bay Area, reductions have been 30%, more than 30% running. So there's no reason to say that they are having higher rental. So I think they are still experiencing the lower rents because the reality is landlords do need to fill up this huge amount of space that is available in those areas, but most especially in Bay Area, where I think we're even approaching 37% already in terms of vacancy.
So that's correct. Because of the tenant-leaning market, POGO operations are taking advantage of the rental decrease of what the normal POGOs would pay pre-pandemic. So, and we're seeing them come back, but not in a big scale as shared by Dom. Tim from Ernest Reyes Sun Life, considering the large number of unsold condo units under developers' portfolios, what is the key strategy for existing owners and new investors?
For the new owners, it's a good time to take advantage of the promotions and the flexible terms being offered by developers now. I mean, they're really very attractive with rent-to-own schemes or down payment schemes that sometimes extend beyond the turnover date, a year, sometimes even 2 years after that. So given that you have a few years to pay off the down payment, and then the turnover of the units will likely happen when economic conditions are better. So I think it's a good time to take advantage of all of these promos. For the existing owners, it depends, of course, on the individual's capacity to hold on to the unit. But if possible, don't sell now because values are low. And we showed in our briefing that the residential rental market will start to improve. So as a unit owner who wants to rent out or lease out the unit, it helps if you make your unit more attractive by making sure, of course, it's properly working, very nicely furnished, and to make it more attractive. Secondary values also are expected to be better in the future. And then, of course, the newly launched projects will likely be priced higher due to higher costs. So acquiring a similar unit in the future will likely be more expensive than if you hold on to your unit now.
Thank you, Tim. Another follow-up question from Roel Nolido. We see increase in pre-selling. However, payment terms seem to be getting longer. Does that mean condo developers are still struggling?
Yes. So the longer payment terms are really a response to the current highly competitive environment. And of course, the need to address the buyers' need to have more flexible and affordable payment terms, or for due to affordability issues. So and these payment terms are very effective in moving sales for the development, since the top selling projects were really offering these promo terms. We saw good sales happening in projects that offered these. And then for some developments, what they did was there were price increases, but the affordability issue was addressed through the extended payment term. So in terms of the buyer's perspective, the amortization that they pay is still affordable, but because of the price increase, the developers' returns are somewhat protected. So there are strategies you can still employ given this challenging environment.
Tim, another question from Mary Dumlao, SMDC. What's the latest data regarding supply and demand for condominiums across Metro Manila and Central Luzon?
For Metro Manila, so our slide showed that it was close to 3,000 units launched, about 11 projects, though the sales were higher at 5,500. And it was distributed more or less equally across the different segments from affordable to the luxury above 8 million TCP. Normally, new launches would be the ones really driving the sales, but for this period, we also saw strong sales from previously launched projects, again, because of the payment terms. For Central Luzon, Bulacan was the one that showed the highest sales out of Central Luzon, around 300 units, though there was some back out, so around 15% back out in that area.
Thank you, Tim. Joey from Renalyn Tan, you talk about the importance of having attractive RFO promos today. What are examples you've seen and how it can be balanced given the realities of increased interest rates?
Some of them have really been extending the down payment promos. So especially with a lot of ready for occupancy RFO units in the market at this point, they've been extending the down payment promos for these RFOs. So early move-in schemes as well are being implemented. Of course, interest rates are really very important, especially if you are an investor. And remember, we asked that the survey question earlier, and really a lot of people are probably utilizing these RFOs, condominium units, as investment vehicles. So this is the market that will be more sensitive to interest rate hikes compared to those that will use or buy condominiums for end use.
Thank you, Joey. Question from Bryce Ruby. I can take this question. What qualifies a city town as having substantial BPO presence? What would be the minimum square meter coverage or employee headcount? So Bryce, Colliers very committed to countryside development. So when BPOs really choose a location, it's number of graduates, quality of the talent available there, availability of BPO ready space, cost of doing business, ease of doing business, connectivity, both telco and infra connectivity. For the last question for Richard Raymundo, from Yoshiteru Ando, Rockland. Let me be a contrarian and ask you this question. Why should we not invest in real estate?
Okay, that's an interesting question. I'll put it this way. I think if you're looking at the short term, and we've seen that, the yields are so compressed right now, residential yields at below 4, you have inflation going up. Probably that's not the reason for you to invest if you're looking just for the short term. But if you are looking on a longer term, and if you are looking to make sure that the value of your property it's like a hedge for inflation, then it's a good time to buy. You know that if you buy properties in the right location from the right developers, it will retain its value. So that's the right reason or reason to get into property. But if you're just looking for the short term with the yields that are compressed, then no. That's how I'll put it.
Thank you, Richard. That ends our question and answer portion. Thank you to our speakers and panelists from Colliers, Joey Roy Bondoc, Kevin Jara, Dom Fredrick Andaya, Paul Chua, Paul Vincent Ramirez, and Richard Raymundo for shedding light on the current landscape of the real estate sector and providing us with useful insights and recommendations as we face promising months ahead. We would like to once again thank our event partners, the Department of Human Settlements and Urban Development, the British Chamber of Commerce Philippines, the Australia-New Zealand Chamber of Commerce Philippines, the Canadian Chamber of Commerce of the Philippines, the French Chamber of Commerce and Industry in the Philippines, Organization of Socialized and Economic Housing Developers in the Philippines, Subdivision and Housing Developers Association, the ABS-CBN News Channel, the Philippine Star, Business World, Malaya Business Insight, Manila Times, and the Philippine Daily Inquirer through Inquirer Property. And to officially close our program, let's hear our final remarks from our Managing Director, Richard Raymundo.
Thanks, Chris. So again, the Philippine property market presents both opportunities and challenges, as we have seen in our last market update. Let me just give you a rundown of my key takeaways from this morning's update. So, office sector, the rebound seems to be headed in the right direction, with the net take-up recording a positive number for the second straight quarter. Again, this is after 7 quarters of negative net take-up. So again, this is not a blip. We're seeing that there is a rebound. The demand is coming from the BPO segment, and there's nascent demand from non-Chinese POGO, as Dom and Kevin mentioned. Challenges remain, with the vacancy remaining at nearly 18% as new supply continues to be delivered in the market. Residential, again, we saw that a take-up of 9,000 units in the first 6 months for pre-sales of condominiums against launches of only 8,000 units. That is very low. Despite the challenges in the residential segment with the looming increase in mortgage rates and increase in construction costs, what we're seeing now is that there are niche segments like the ultra luxury that appears to be strong. Again, look at the projects like Balmori, selling units priced at more than 100 million in such a short period of time. The hotel sector has seen revenge vacation spending from the domestic market, with luxury resorts still at peak rates. While foreign tourist arrivals have improved year on year, that the challenge now is what will make up for the missing Chinese market. For the industrial sector, this continues to expand with the demand for data centers. Expansions have also been noted in the southern and central Luzon for the manufacturing segment. Again, while challenges remain, there are opportunities in the market. Now that the elections are over, we are hoping that we get to a more pronounced recovery throughout the year. Thank you for attending our briefing this morning. Keep safe, keep well, and thank you again.
Thank you, Richard, and thank you to everyone who joined our webinar today. You're welcome to reach out to our team if you have further questions, if you would like to receive more information on the office, residential, industrial, or hotel sectors. If you'd like to stay updated on the latest news and insights on the Philippine property sector, please visit our website, colliers.com, and follow us on LinkedIn, Facebook, Twitter, and Instagram. If you'd like to hear more from Joey, he has a regular column in the Philippine Daily Inquirer called Colliers Review. It comes out every Saturday in the newspaper's property section. Colliers also has a regular column in Business World called Colliers Insights, the Philippine Star called Colliers Outlook. So please make sure to get copies of these newspapers as well. We'd also like to invite you to attend our Colliers upcoming event. We've seen 72% who's ready to go face-to-face. So on August 10, this will be a hybrid event, on-site and off-site. So we have 50 people that can go off-site. So it's first come, first serve. We'll be showing you the link in this chat box. Mental well-being for sustainable performance, which will be held at the Common Ground in the IBP Tower along Julio Vargas Ortigas, will be live streamed via WebEx by Cisco, our official platform. To register, please scan the QR code flashed on your screen or click the link in the chat box. Then on August 17, we would like to invite our partners for an open house in Studio 7, the newest Philinvest building along EDSA, located in Quezon City. So you may also email us at philippines.lr@colliers.com for more details. And finally, tune in to Colliers Insights podcast hosted by none other than Joey, which is available on the Spotify and Google podcast. In our latest episode uploaded last Monday, Joey discussed with Matt De Lima, Colliers Associate Director for Capital Markets, the latest on the industrial real estate. So please make sure to check it out. So once again, on behalf of Colliers, thank you for joining us today. Stay safe, stay healthy. We look forward to see you again in our next market briefing. Bye, everyone.